Hello and welcome back to the Risk on Investor. My name's Chaz. If you've seen the first video, you'll see that I'm on a journey to build a £1 million investment portfolio. So in this video, I just wanted to lay the benchmark for where I'm at so far from my career, how much I've got saved and invested, just so you can see the starting points, the risk that I've taken so far, and maybe I'll just discuss a few of the things that I'm looking at in the future. So just to start with, obviously none of this is financial advice. This is entertainment. On this channel, I'm going to be trying to do a bit more of an analytical side of why I'm investing in different things, how I'm approaching things, but you should be doing your own research. So just want to start with the career earnings. So I've been in the workforce for 6 years now. So 2017 was the year that I graduated. My starting salary was just shy of £25,000, a major engineering consultancy. I was actually only there for about a year. So if we start to skip forward, if we skip forward a year, I just swapped companies in 2018. It was a very minor sort of pay increase, but the opportunities were much bigger, which is why I hopped then. The company I was at to start with actually offered a 7% pension match as well. So that was a perk of working at that first company. And you'll see the pension figures later on in this video. So I've been at that company since. So you can see here the progression in salary up to 27, 30, 33, 36. I then had a promotion in 2023, which took me just shy of 44,000. So I've been consistently contributing to a pension through that time. I haven't been consistently contributing to other investment vehicles in that time, but again, I'll talk through those as we dive into the actual sort of numbers and splits. So this is a sort of total net worth graph. You'll see that house equity makes a big chunk of that. So I purchased a house with a mortgage 2 years ago. So I caught the back end of all the COVID price increases as well. So that's why that makes up such a large chunk. But the bit that I'm going to look at here is the right-hand side of that chart. So the pension, the cash, the stocks and shares ISA, and the crypto, which makes up about 50% of the net worth. You'll see there's a note there at the bottom. So I have a little bit of sort of VC investing, which I've not shown here. And again, I'll dive into that in a future video, I think, because I think it warrants its own discussion about why I'm doing it, why it's really high risk, why it's only a small portion. But yeah, it's not shown here. So if we just zoom in, excluding that house equity side, you can see that really the bulk comes in two areas, and that's in the pension and that's in crypto. So historically, back in 2017, I was finishing university, but I caught the back end of the sort of speculation hype bubble that happened in crypto, and made about £11,000 or £12,000. I can't remember the exact number off the top of my head. So a lot of that went into my house deposit fund from around then. But since then, I've started building up another position, expecting another sort of hype cycle in crypto, which is why, again, it's such a big section of my current asset allocation. And you'll see there it's just shy of £85,000 at the moment. So my pension split into two locations. So I have my workplace pension. So every month I'm employed, as you'll know from the first video, I'm actually on some unpaid leave at the moment to sort of kickstart this challenge. But every month that you're employed there, that goes into your workplace pension. That's just invested in a global 100% equity portfolio. The majority of my pension savings are actually in a SIPP. So the workplace pension that I can access actually has fairly high fees. So I try and swap out and transfer out my pension holdings into a SIPP, and it also gives me a lot more flexibility. So in the workplace pension, the provider that my company uses is Standard Life. There isn't actually that big of a selection of funds and individual investments you can pick. So by going into a SIPP, I can unlock a wider variety of investments and for cheaper fees. So you'll see there that total pot's just shy of 37,000. The crypto holdings are a little bit more complicated. That's because I'm actually a big fan of decentralized finance. So I won't dive into that here. Maybe I'll do a future video on that as well. but you'll see here that there are some liabilities in that value. You'll also possibly note, for the eagle-eyed among you, that the number at the top there is it doesn't quite match the graph. So the reason for that is the number at the top is discounted by about 20% to account for future tax liabilities, because this is obviously unsheltered in unsheltered investments. There'll be a tax liability if I sell for a profit, and you'll see there that the vast majority of this is in staked Ethereum, with a debt position in USDC. So that means I'm slightly leveraged in that Ethereum position. So I've taken on debt to buy more staked Ethereum. The appreciation of the Ethereum in terms of its yield broadly matches the debt position. So in terms of net interest, as it were, on the position, it's about neutral. And you'll see there's a tiny portion as well in a project called Gala Games. That's really a leftover from the last sort of crypto hype cycle, which I'm not actively building any position in that. There's just a little bit of leftovers there that I'm just letting to ride to see what happens. I have a cash position, so it's about £7,000. As you'll know from the first video that I did on this channel, because I'm on unpaid leave at the moment, I'm expecting to draw down from this pot. So I'm expecting this pot to actually shrink over the coming months. But it's just parked in a Monzo pot, earning 4.1% interest. If you are interested as well in signing up to Monzo, there is a refer a friend scheme where if you sign up via my link, you can get a £5 bonus, and I'll get a £5 bonus as well. I think the only qualification for that is you need to make a card payment in 30 days. But this is just where I keep my cash parked. I actually quite like Monzo. I use it for my day-to-day banking. The push notifications, the projections on your spending, if you're going to run out of money for a month, all that kind of stuff I find is really useful. I do have accounts with sort of non-app-based fintech style banks, and they are slowly catching up in terms of the features and the usability. But for me, Monzo and some of the other startup banks, so I have a Starling account as well that I use to compare, they're all still a long way ahead of your sort of Lloyds, HSBC, Barclays, etc. So this is the area I really want to work on, and that's the stocks and shares ISA. So you'll see that there's about £4,000 in a trading 212 account. The ISA is a tax sheltered vehicle, so any capital gains aren't taxed, which is ideal for the high risk type investing where I could potentially make much higher gains in short periods of time. So not having to worry about the capital gains tax and the constant selling, rebalancing, etc. It is really great, and that's a big perk for the ISA for me. I'm a fan of trading 212 because there's a really big selection of things you can invest in again, in the same way that I've transferred my pension into a different provider so that I can access a wider pool of funds. Trading 212 has a really good selection of funds. I'm not actually that keen on a lot of the interfaces of trading 212. I know some people really do like it, but it's maybe not my favorite feature of it. They do actually have a free share scheme as well. So like Monzo, if you do want to hop onto Trading 212 and give it a try, let me know. I think I get 5 share with a friends links where we can both get up to a free share up to £100 if you signed up. You do have to fund your account. I'm not sure if there's any minimum fundings to qualify, but that's just a little caveat if you want to try it. I'm not an affiliate for Trading 212. The affiliate program isn't for the ISA, and I don't want to sort of advertise things that I'm not using, basically. And I am only using the ISA of Trading 212. So this is really the crux of why this channel has been kicked off. So if I project out different returns every year and different deposits every month into an investing account, you'll see that it takes a long while to get to £1 million. So on the left here, I've got a £500 a month deposit at a 10% return. Just to say, again, for future reference, I think 10% is a very optimistic return if you were just looking at a broad market fund. I know a lot of people will say, oh, but the S&P 500 has returned about 10% a year for 100 years. That's great. That doesn't include fees. I think that's biased towards the US. So I wouldn't invest just in an S&P 500 tracker. It doesn't include inflation as well. So that £1 million in 22 years or 19 years, as we look at these charts, won't have the same purchasing power as £1 million now. For those kind of forward projection benchmarks, I tend to use about 5.5%. And that comes from a Credit Suisse report. Obviously, Credit Suisse no longer exists, but they used to publish every year returns for different asset classes. And for an equity portfolio, for a global equity portfolio, they used to put a real return at about 5.5% a year over the long run. So that's what I tend to use for those kind of predictions. But you'll see here just the length of time, 22 years and 19 years, is just longer than I'm willing to wait at the moment. So that I'm looking to dramatically shorten that time frame, but I'll be accepting much higher volatility as part of that. The chart on the right is probably closest to where I was heading prior to starting this channel. So I was putting in about £1,000 a month into my pension. So that was salary sacrifice. Obviously, I don't lose £1,000 out of my take-home pay. I save on the national insurance contributions, which my company add on to your workplace pension. So you get the double whammy of the tax saving, the NI contributions, and then the growth on all of that combined. So that chart on the right is probably where I was heading, prior to starting this channel. So what's coming on this channel? So there's quite a few things I'd like to talk about, to discuss, to explore. So first things first, as you may know from my first video, I need to generate a bit of money coming in. So there's a couple of things that I'm actively looking at the moment, and you can expect some videos coming out about that soon once I've got some results to share. I'd like to do a video on leveraged ETFs. Some people love them, some people hate them, and I'm potentially going to look at using them in the future. So I'll show you the pros and cons, why I like them, the things I don't like about them. I'd like to do a video on my venture capital investments, the platforms that I use, why I use it, just a bit more around that. I'd like to look at some of my crypto thesis. We can talk about what I like, what I don't like, why it's high risk. I think that's fairly obvious, but we'll dive into a bit more detail. I've got a lot of charts and data that I want to show with that. That's quite analytical type video. And also maybe my plans for the Risk on Investor newsletter. So if you haven't already subscribed, you'll know from my first video that I'm going to start a newsletter where I'm going to share a lot more of the financials and the behind the scenes of the progress. There's also, I'm probably going to do sort of weekly recaps on main news events as part of that as well. So if that's something you're interested in, there'll be a link down in the description. In the meantime, if you'd give this video a like and a subscribe, that'd be really helpful. Some encouragement below. This is a big challenge to try and get to 1 million, and you'll see from my starting pot, it may look good at a sort of 8.4% progress, but realistically that's taken me 6 years to get to. So that's going to take a long time if I keep going at that speed. But I'll see you soon. I'll see you in the next video. Thanks very much for watching.